I like to look at this in four ways. One, the very narrow sense. This is a really strong report on the demand side, not on the supply side, on the demand side, but strong in terms of demand for employees, strong in terms of wages paid, etc. It does close the door on a July rate cut. I think that is it, almost regardless of what the CPI number says next week. But then step back and ask the question of reconciliation with other data. And then the story gets a lot more interesting. We have this situation where the backward-looking data is strong, the forward-looking data is weak. So we've got to sort of reconcile these two things, which leaves us to the point that Lisa raised, which is, what is your view of the economy? Because if you don't have that view, you're going to continue to get whipsawed for quite a few months, and you're going to miss windows of opportunity that are really important.
Your framework does expect some more significant weakening. Does this data change that to you? Does slamming the door on a July rate cut seem reasonable to you, or are you concerned that this is basically the wrong signal at a time where what comes next looks different than what came before?
Look, it's reasonable for a Fed that is overly data dependent. There's no way they can cut or signal a cut in July with this data. They would have to change their reaction function and be public about it, and I don't see the Fed doing this. So that's why the door is shut. Now, should it be shut is a much more interesting debate. You know my view. We are in a weakening economy. There are no spare tires to speak of anymore. There's no pandemic savings. There's no huge new fiscal impulse coming. There are no spare tires in this economy. So if you get it wrong and you weaken too quickly, it's going to be a very difficult mistake to correct. The problem is, which is the other bit of my view that you know, is we are living in a secularly inflationary world. Secularly, inflation is going to be higher because of all the transitions going on domestically. We no longer talk about liberalization, deregulation, fiscal prudence. We talk about trade restriction. We talk about industrial policy. We talk about fiscal irresponsibility. And globally, we talk about fragmentation. All that means a more inflationary world, which then raises the question as to what should be the right inflation target. So if you put all this together, it does shut the door for this Fed, but it will not shut the door on a very active debate that's going on that tries to look forward, not back.